Hey, good morning, everyone. Welcome. Sorry, we're kind of trying to keep tabs on the news here as it unfolds. There's seems to be kind of a steady news flow happening today, but none of it's really very accurate. So let's kind of start at the top, and as things develop, we'll let you know as we can find good information. But let's start with kind of the macroeconomic stuff, right? Um, because all this stuff is just increasing volatility like crazy. Here, hold on. Jeff is showing me something. China reacts to Putin's speech urging immediate ceasefire. Um, Urging immediate ceasefire. So that article broke just a few minutes ago, and that sent soybeans down about 12 cents, sent corn down 7, and it sent wheat off about a dime. So we're very, very sensitive to headlines, right? So let's kind of talk about what happened yesterday, and then we'll roll through the charts. So yesterday we had a lot of strength, especially in Kansas City wheat, right? Big up day. And what was the headlines? Well, it's all coming out of Russia, and the best that we can tell is that it looks like Russia is getting more aggressive. Putin is behaving strangely, and he is trying to annex 4 countries and talking about annexing the Ukraine and mobilizing over 300,000 troops coming from young men across the country, and actually made it illegal yesterday to for a male between 18 and 65 to leave the country. So that sent wheat back higher. That sent corn higher as well. And beans have been trading higher based on the USDA news. So they just kind of tagged along yesterday. So you run the risk of all those headlines just kind of disappearing, right? And whatever premium you pumped into it, they can take back out immediately if the ceasefire gets announced, or something were to happen, and who knows what that would be. So if you read the news and you read Twitter, what you're going to find are a whole bunch of newfound experts. I think, and look, take your social dilemma. No matter what it is, you find people that just automatically become experts on absolutely everything immediately. And so I think our approach is going to be opposite. We're just going to confess that we don't have a clue what Vladimir Putin is going to do. We're going to accept the fact that we have no idea what the internal dialogue is between these countries. I'm not privy to it. I don't think I know anybody that is privy to it, and I don't think we know what is really unfolding, right? Because I'm sure there are lots and lots of communications happening and actions happening behind the scenes. So I think it's most important that we just trust that all those developments are going to unfold on the screens before us, because there's people more connected than we are. So I don't know what's going to happen in China, or I don't know what's going to happen in Russia. No idea. I also don't know what the Federal Reserve is going to do. It seems like the common wisdom is that the Fed's going to hike interest rates by 75 basis points. There's a lot of people that think they may hike more, and that they need to hike more. I have no idea where they're going to go, and I certainly don't know how the market's going to react to whatever this unknown information is, right? But I do know that that these setups that we currently have are are powerful enough to move the market significantly either direction. So let's jump in and let's talk about that, and let's talk about how we're going to market our grain through it all, and we're going to just let price action be our guide. We're not going to overthink, and we're not going to try to prognosticate, because odds are that we'll be wrong. So let's just let price tell us what to do. Now let's start with soybeans, and then we're going to go to wheat, and then we're going to go to corn. And with corn, we're going to go through the daily, December chart, and then we're going to go through the spread charts, because I think it's really interesting what's happening in the spread market in or between the different contract months in corn. Okay, now here's soybeans. This is last Monday's report where we got the big supply shock of a 1.5 bushel per acre reduction from the USDA, right? And what's the immediate bearish reaction talk, right? Okay, we rally it, and then we trade it down for 4 days. Based on what? Well, it's this assumption and belief that that the recessionary fears are so powerful that demand destruction is a foregone conclusion, and so therefore we must trade it lower. Well, we started getting bought for no apparent reason here on Friday, right? And we rallied, or Monday, Tuesday, and then here's Wednesday. So we're attacking this area here. Now, what's significant is that we've traded from the bottom of the cloud all the way through it. We came back down and we tested the top side of it, which is perfectly normal market activity. We've broken through the 200-day moving average. We've broken through the 100-day, the 9-day, the 26-day, and the 52-day. So we've broken through all of these moving averages, and we've reverted back or thrown back, and we've tested them, and now we've reversed back from them, and it looks like we're going to assault this high. Now, we'll see what the market decides to do with this news of Xi asking President Putin for a ceasefire. Okay, and I don't know if that is driving soybeans, or if soybean supply and just shortage is dragging soybeans. So if we attack this high at 1508, then I think we're just a quick move to 16. And then if you pop above that, you don't know where we go in beans. So this count is actually very, very bullish soybeans. And what can derail it? Well, it's the macro jitters, right? It's the fact that we seem to be just overreacting and reacting instantly to lots of stuff. So this is the theme for today. There's so much uncertainty. It's prudent to have floors set in place. It's prudent to remove downside risk. It's prudent to make sure that you're protected. It's also permissible and okay to respect that we can blow higher here, and that we can take out these highs. And one thing supporting that, the market knows that South America, between Brazil and Argentina, we're going to increase their crop sizes by some 30 million metric tons. That's 1 billion bushels of additional supply over last year coming from those two countries. And the market has known that, and yet we haven't broken lower. So something is unfolding that I don't think we understand, which to me opens up the upside, because all those bearish fundamentals on the demand destruction, new supply, they've been in this market for a long time. None of this is surprising to us, and yet we haven't broken it. We've been unable to squash it. So leaving your upside open is equally prudent to having downside protection. So how do you do that? Well, you can sell cash and buy calls, or you can buy puts. Those are really your two strategies. Both are very simple. Both are very basic. Both have limited risk and unlimited upside for you. Both are viable alternatives. I don't like just being cash sold with no re-ownership, because the upside is honestly too risky. We don't want to see these things explode up $4 or $5 and not participate. So I think as a farm marketer, that's how you've got to be thinking. I want to either sell my cash and buy calls, or I want to buy puts in my account and leave my basis and my cash open, because we don't know yet what's going to happen. Now let's look at Kansas City wheat. I showed you this just a second ago. What's interesting about Kansas City wheat is that yesterday's close was closed back inside this bar from July 11th. Now this was a dollar hook reversal, okay? Wheat traded way higher, traded all the way to 10.10, and closed all the way back down at 921. So the full range of this bar is almost a buck. Now, what's interesting is that all of the trading activity from July 11th until yesterday had been contained below this high from July 8th. All of it. So yesterday we broke back up into it, and now it looks like we've tested the backside of it. I think a failure here and a reversion back down to this, back down inside this range, and you got to give wheat lots of room, right? So let's call it 925, somewhere between 950 and 925. A reversion back down into that will probably open up the downside all the way back down to new lows in Kansas City wheat. You don't want to see that. Now, if we test it and bounce back up, then I think that you're looking at a move probably up into that $10.50 or $11 area. What will cause that? I have no idea. That is anybody's guess what the fundamentals will say when we get there. But technically, that's where we're setting up. And this is also interesting here. I want to zoom. I want you to look at. You got to squint a little bit, but this is a bullish crossover on your cloud indicator happening at the same time as we've broken this high. I don't think is a coincidence. So I think that leans more bullish, but it is wheat, and who knows what'll happen. I mean, if we get peace talk headlines, we could easily undo everything we did yesterday in Kansas City wheat. That is 100% on the table. It's done it before, and it can definitely do it again. I don't think that's what's going to happen. I think we're going to be more volatile than that, but I don't know. All right, 8 minutes left. Let's look at corn. Corn, to me, corn is the simplest of all the markets. You've got this. You've got the peak. You've got this intermediate low right in here, and you've got today's action. This is also the 61.8% retracement from the peak to the low, and they just happen to coincide perfectly. I've been saying for a long time that anything above this trading range right here is bullish. Well, now I think anything above this is bullish, and I think anything below it is bearish. So what are we doing? Well, we broke up through it, we tested it, we broke it again, and now we're testing it again this morning. If we fail here and work back lower, I think it turns bearish really fast. What will cause that? I don't know. I don't think our supply is there, so it's interesting that we haven't blown higher already. But if we break this high, then I think that opens up corn to move much, much higher. And I don't think that 730 or even 750 will stop it. I think it's going to move to new highs if it takes out 7. I think we're going to move up really quick. Will that be supply shortage? Will that be new demand? Will that be problems coming out of the Ukraine? Will that be caused by the fact that only 30% of the nitrogen production in Europe is online, and the bulls need to buy that? I have no idea. But I know that this line is critical, and I don't know how you can be wrong if you just accept that if we break and go back lower and we break these lows again, that we want to be short, and if we stay above them, then we want to be long, right? Simple, simple, simple is the way to trade this market. Now, let's look at the spreads, right? There's December, there's March, there's May, there's July. Those would all be your new crop contracts, right? And what's interesting about this is that for the last several weeks, we've been trading in a carry market, right? We've had December under March. That's what this is representing. This is December corn minus March corn. And we are trading right now we are trading 4.5 cents under. We've been trading as much as eight under. An 8-cent carry, or December trading 8 cents below March, is historically I would say mid carry, right? Like 13 would be about the max carry that you would get. So 8 is a decent carry, incentivizing you to hold corn. But look what we've done since August 1. We've rallied it. We've cut it in half, and we're on the verge of another poke higher up to an inversion. Look at December to May, even a more pronounced 17 to 18 would be full carry here. We traded down to 12 under, and at the moment we're trading 5 under, a large rally in that spread. What happens if we break it higher? Because now look at your spread out to July. This is your December-July spread. 28 to 33 would be your max carry. The lowest we got was 14, and that was on August 4th. And we've rallied it to an inverse of +1, +2. So somewhere here in the last month, corn has gotten the message that it needs to start inverting. Now, will it invert against May and March? Time will tell. In the cash market, we're already inverted. Right? We've been inverted for some time in the cash market. So if the futures invert, then that's a signal to the market that it's got to go higher. So pay attention to this here, because I think that a move, if we break this high at 6.99 and we trade back above 7, I think that's going to be led by spread strength. Now, I don't know why it will do that. I have no idea if that's because demand is here and stronger than we think, energy stronger than we think, supply is tighter than we think. I really don't know, but the market is telling us something because the spreads have already tightened. And the oldest adage in grain trading is, in order for price to move higher, you first must rally basis, then you must rally spreads, then you can rally flat price. So for everybody that's been super bearish, right, all summer, well, they've missed a dollar rally since the beginning of August, and they've missed the spreads starting to invert. So I think there's much more to this corn story, which is why I think we've got to be long calls or long puts. I think we've got to have floors in place, because the bearish count still counts all the way back down to new lows, and $1.50 risk is more than we should take at this point in the year. But the upside is too great. So I can't say it enough. Long calls, sell cash, or own puts and leave your upside open. Way too much left for this market to do before we really know what's unfolding and what's happening. So I hope that's helpful, and I honestly hope it's that you can appreciate that we don't know, right? Like I don't think you can read 1,000 articles and get more clarity on the Russia situation than I don't know, because I don't think it's possible. And I also don't think we understand what China is doing, and I certainly don't think we understand what our administration is doing here either. So we've just got to let price be our guide, and let's keep it super, super simple. We're gonna hold kind of this 87 to 80 level, or we're not. We're going to work higher from it, or we're going to fail on it, and we want to trade short below it. Let's keep it that simple and just accept it and move on, and we'll we'll end up just fine. If we get banged around in here a little bit, that's perfectly fine with us. Remember, there is significant risk trading futures and options. There's lots of unknowns, and so you've got to manage your cash very carefully, and you've got to trade according to your own financial conditions. I hope you guys have a great day. Please call me if you have any questions. We will help you get positioned. We want that upside open. We want that floor set and that downside protected. I hope you guys have a great time. We'll talk to you later.